Welcome to the Baltimore Metro Market Watch, brought to you by Real Estate Business Intelligence, an MRIS company. Let's examine the most recent numbers from the Baltimore Metro housing market, which includes these areas. During the second quarter of 2012, the pace of national economic growth slowed, and it became evident the recovery will be protracted. The U.S. economy added 80,000 jobs in June, below forecast and far below the pace needed to significantly lower the unemployment rate. Job growth averaged 75,000 per month in the second quarter, compared to 226,000 monthly during the first quarter, and many economists anticipate slow job growth throughout the summer and possibly into the fall. Consumers and businesses remain cautious in their expectations about the future, largely because of political and economic uncertainty. While congressional negotiations continue, there seems to be little movement toward a compromise that would avoid the $1.2 trillion in mandatory federal spending cuts scheduled to go into effect on January 2nd. Taxes also remain a source of uncertainty. President Obama proposes an extension of the Bush-era tax cuts for families earning up to $250,000. However, Republicans argue that higher-income households should also be included. Reports from the national housing market remain upbeat. Sales and pending sales activity are up, with most metropolitan areas experiencing price increases. New construction is also rebounding. The number of new housing starts has risen to its highest level in 4 years. While the national housing market shows signs of life with prices and construction activity, it's important to interpret these trends with caution as the nation's political and economic situation continues to evolve throughout this election year. The pace of job growth in the Baltimore metro region slowed somewhat, with about 2,000 jobs added over the past 12 months. The unemployment rate increased slightly to 7.1%, up from 6.9% a month ago. There is evidence that demand is rising in the Baltimore metro housing market. The inventory of homes for sale continues to fall. The 12,632 active listings at the end of June are 26.4% below this time last year. The 3,786 new listings coming to market during June reflect the lowest number of June new listings in 15 years. While the inventory is in decline, sales activity is gaining momentum. There were 2,567 homes sold in June, the highest monthly sales total in 2 years. New pending sales declined 7% from last month, in line with seasonal patterns, but still 11.1% higher than June 2011. The low supply of active listings, coupled with strengthening sales activity, is creating upward pressure on prices. The June median sale price of $250,000, the highest level in 2 years. The average days on market is 98 days, down from 112 days a year ago. The sale to list price ratio has also narrowed, increasing to 92.5% from 89.6% in June 2011. The current dynamics in the Baltimore housing market point to increasing demand, higher prices, and quicker sales in the coming months. The number of active listings should eventually increase to meet growing demand, though it is unclear when this will occur. Many potential sellers are still faced with significant equity loss and could be waiting for prices to climb further. That's the Baltimore Market Watch for this month. Check back next month for the latest.